MTN SME Hub. Link to growth. Link to success. Link to the ultimate resource for business advice and insights.
Welcome to the Big Small Business Show, the show for our wonderful entrepreneurs out there. And sometimes we've got to get serious, and sometimes we've got to talk this thing called tax. I see so many small businesses actually failing because they don't get their financials right, and in fact, their taxes right. And then, SARS comes knocking on the door and then asks you for money, and you don't have it because you haven't treated it in the way it should have been treated. And then, oops, you've got trouble. So this show is for those entrepreneurs who might be in a little bit of trouble, or those who are wanting to prevent themselves from getting into trouble. And we've got our trouble preventer in studio with us. His name is George Diab. He's the CEO of Gas Accounting, and he'll be talking to us about tax. So welcome back.
Thank you, Allon.
So let's start off by talking about PAYE. Okay.
Sure.
Pay as you earn.
Absolutely.
Okay.
Yeah.
Talk to us about PAYE.
It's actually quite an interesting thing. Most taxpayers in South Africa, millions of them, pay PAYE, but not many of them actually understand what it actually is. And essentially, PAYE is just an advanced payment of your income tax liability. So the employer will, on a monthly basis, when paying their employee, deduct the calculated amount of income tax from their salary and pay that directly over to SARS. And what that prevents is the employee getting to the end of the tax year, incurring this massive liability that they need to pay to SARS, and often unexpected as well, and they don't have the cash flow to support that payment. So SARS on the one side is protecting themselves from bad debts, and they're ensuring collection, and they make the collection the onus of the employer. So it's literally the liability of the employer to collect the PAYE, and then they're also protecting the taxpayer just to ensure that the taxpayer is paying it on a monthly basis and keeps up to date with their taxes.
Does the employee have the right to say, I don't want you to collect it, I'll do it?
No, they don't. So the fourth schedule of the Income Tax Act specifically says if you are an employee of a company, the employer is liable to pay over that income tax on behalf of you.
So what happens now if I'm just trying to get around it,
Sure.
So what happens now if the employee says, I'm not an employee, I'll become a contractor to you?
Sure.
Okay.
So we do see that quite often, and there's quite look, you're not reinventing the wheel here. This has been done many times before.
Mm-hmm.
There's legislation and precedent that's been set as to determine when someone is an employee or when someone's an independent contractor. So I'm not going to go into too much detail around it, but if you get a monthly salary from the employer and the employer controls your time, you're an employee, and the employer has to deduct PAYE.
Then now there's a concept of provisional tax.
Yes.
Right. So who is and who isn't a provisional taxpayer?
So provisional tax is quite similar to what PAYE is. PAYE is a deduction from your monthly salary that the employer pays over. And again, like we said, it's over there to protect the taxpayer and ensure that they're making monthly contributions, right?
Yeah.
Provisional tax is quite similar. So anyone who's not defined as an employee, but does earn other income, needs to be a provisional taxpayer. That can either be an individual or a business. And provisional tax is every 6 months. So where PAYE is monthly, provisional tax, you have to make a provisional tax declaration and payment every 6 months. So again, you don't get to the end of this tax year with this big unexpected liability.
Could you be paying PAYE and be a provisional taxpayer?
You could, correct.
Yeah, why would you do that?
So if I am an employee and I'm making monthly PAYE contributions, but I've also got rental income that comes into my books.
Secondary income. Okay.
Secondary incomes, then I would need to do a provisional tax declaration.
Okay. So just talk about why is it at the end of every tax year when you go to sort out your tax, there's generally a discrepancy either in the positive or the negative around with SARS. Like your people who do your tax say you've paid up or you owe a few X amount, and then SARS comes back and says, no, you owe more, or we've got actually you've overpaid. Why does that happen?
So when we're calculating your PAYE, right, we base it on the income that you earn. But there's certain other tax deductions or tax credits that you as an employee could get.
Right.
For example, if you contribute towards a medical aid, you get a medical tax credit.
Yeah.
If you work from home, you could get a home office allowance, which is tax deductible. If you contribute towards a retirement annuity fund, you also get a tax deduction. So as the employer, they can't take into account every tax deduction that you in your personal capacity may have.
Okay.
So when you're doing your final tax calculation, we take those deductions into account and then give you a final number of tax that you should have paid.
So let me ask now, if I were an employee, should I, and you are my boss, and you taking off the PAYE, who has to submit the final tax at the end of the financial year to SARS? Is it me or you?
It's you. So as the employer, my responsibility is to deduct tax based on the remuneration you earn, pay that over to SARS, and issue you with an IRP5. And that IRP5 is a declaration of the taxes that you've paid or that I've paid over on your behalf.
Okay.
But when it comes to your final tax return, it's your responsibility to take all your IRP5s, add in any additional tax deductions or tax credits that you may have, and then do your final tax calculation. In that final tax calculation as well, you would need to declare any other income that you've received from non-remuneration sources.
Okay. Just quickly, we've got a minute left to talk about UIF, Unemployment Insurance Fund. Tell us about that.
So the UIF is really just there for financial support for individuals or workers who are either unemployed due to retrenchment or can't work due to illness or maternity leave. So both the employee and the employer contribute towards the UIF. It's generally 1% each. And as the employer, I deduct that from your pay. I also put my contribution in, and we pay that over to the Department of Labour on a monthly basis. And it's really just to support unemployed workers.
All right, that's all we've got time for this session. We're going to take a break now. When we come back, we're going to continue our conversation with George Diab from Gas Accounting, and we're going to be talking about assessed losses.
MTN SME Hub, link to business success.